Craig Nelson has our program today. Craig?
Well, here we are again at the beginning of a new year, and it's my pleasure to introduce our speaker today, Fred Dickson, Senior Vice President and Chief Investment Strategist at D.A. Davidson & Company. Fred began his career in 1973 as part of Goldman Sachs' top-ranked investment strategy team. He's been an institutional manager, a top investment officer at several firms, including the Director of Research at D.A. Davidson in the 1990s. He's even been a college professor. He may seem familiar to you. He's been on CNBC and Bloomberg. He's been asked to comment on his insights on the markets for many years. I guess what I'm trying to say is he's very smart, he has a lot of experience, and he's dedicated a good deal of his career to helping people make sense of the crazy markets. So please help me welcome Fred Dickson.
Thanks, Craig. How can I top a political PAC-oriented sponsored video like I just saw? That was your program. What a wonderful way to combine technology and have a club. It's wonderful to be in front of a club that has a sense of humor and a sense of dedication. I may have an opportunity to talk a little bit about things that we see happening in 2012. At the top of my list of the big economic drivers for the economy, it's water projects around the world. So what more timely theme than what I saw up on the board with the help of your Rotary Club and the work that is being done down in Latin America. First, thanks for having me back. Even more, thank you for pushing the right button and having sunshine, so I didn't have to drive up from Idaho Falls this morning in the snow. I have with me my colleague, Emmy Rhodes. Emmy Rhodes is a senior research analyst and associate director of research at D.A. Davidson and was our top performing institutional analyst, or individual analyst in our research department in terms of stock picks last year, and she covers healthcare and consumer stocks. You'll notice I came prepared in case I had one of those questions that I couldn't handle. I said the last time I'd bring an expert with me. Believe me, I brought an expert with me today. So I think I've embarrassed Emmy enough, but she deserves all that she has. She's been with me for 10 years at D.A. Davidson. We're going to be looking ahead at 2012. The economy, the markets, these are topics that I think we've heard a lot about. I'm going to ask you to take about a 20-minute break, tune out the political commercials that you see on television, and let's kind of look back and see what's happening, what has happened. The SEC says that I need to tell you that what I'm saying is consistent with what I've been writing. So if I have any SEC police in the audience, I've done my duty legally. Boy, what a year we just came out of. If I looked at this list of things that happened last year, and it was put in front of on a piece of paper in front of me, and somebody would say, Fred, these things are going to happen. What do you think is going to happen to the market in 2011? I'd say probably down 25 or 30%. We absorbed and saw what happens when you put cell phones in the hands of 20-year-olds in the Middle Eastern countries that basically triggered a revolution that toppled 6 governments. Mind-boggling. Mind-boggling. All I could think of, that's the word that comes to mind. And that still hasn't settled out in that part of the world. We saw China start to slow down its manufacturing and home building and industrial juggernaut because of inflation. Probably the tragedy of last year was the Japanese earthquake and tsunami that killed several thousand people. But what we learned in that tsunami was that we live in a world of global economic development. And paint factories in the U.S. depended on pigment factories in the Fukushima region of Japan for critical elements, and it caused manufacturing disruption, not only for paint, but for all kinds of microchip processors that are used in all kinds of machineries. When you go out after lunch and go to your car, look at it with a new idea. What you're doing is driving 1,500 microprocessors that are sitting on wheels that happen to have a motor. Most of those little mini controllers were processed in factories in Fukushima or that region of Japan, and those factories were absolutely buried. At the time that happened, we knew that there would be an economic impact in the U.S., and there was. That was a reason for the slowdown last year that caused some people to think that we were going to go into a recession. Pardon me. As we looked through that and listened to the Japanese government, they were predicting it would take 2 to 3 years to get those towns and those factories back online. That would be a big event. They are back online. We're operating at full capacity within 6 months. 6 months! Wow. Airports that were underwater and destroyed, back operating within 6 months. It shows you what can happen if you have a government that allows business to meet natural disaster challenges without mountains and thousands of piles and pages of regulation. But that did happen, and that was one of the reasons our economy picked up in the summer. Our manufacturing plants were able to come back online. We had to deal nationally with weather, 1,200 tornadoes, flooding, wildfires. Again, another disaster. Remember Sunday afternoon back in July when I think it was July, it was either June or July, we looked at pictures on the Sunday evening news and saw Joplin, Missouri flattened. I mean, that was amazing. But we saw 1,200 tornadoes really wreak havoc in the central part of the country, down through the central southeastern part of the country, and that had an economic impact. We rebuild quickly, and that's what shows our resilience, and that's something that we can be proud of as a nation, supporting that area. And we overcame that. We saw oil prices go up into the, Portland, Oregon, $4.15 a gallon last May. I don't know about you, I didn't appreciate paying $4.15 a gallon. I don't think anybody here did. I loved it when I pulled up to the pump back in Idaho Falls last night, and I paid $2.87 a gallon. I said, whoa, a two number in front of a gasoline can, or per gallon of gas. Didn't think I'd see that again, but I'm seeing it. Enjoy it for a little while. It's not going to last. We've heard a lot about what's going on in Europe. The European countries, particularly the southern European countries, Greece, Italy, Spain, Portugal, found themselves dealing with slowing economies, primarily because a lot of their export products that were going into Asia, the demand for those products were slowed down as China was slowing its growth. It didn't take much of a slowdown to cause a financial crisis, as those economies are so weighted and so leveraged with a very small economic base that's supporting a very, very large social structure, that if you have any kind of slippage in that economic base, then all of a sudden they found themselves not being able to pay for the social payments and the welfare payments that are pervasive in that part of the world with current funding. They had to borrow to pay pensions, they had to borrow to pay a lot of welfare things that they receive, and that became a problem when those borrowings came due. I know we have at least one banker in the audience, but banks like to be paid, investors like to be paid, and in order to do that, they had to roll that over, and that became a problem. That problem spilled over into the global economy to a degree, but not to the degree, I think, that got popularized as it was described through the fall. We also had two major debt ceiling debates, one in March and another one in July, a minor one here in December. The one in July was the granddaddy of them all, because I think a lot of people and a lot of corporate leaders didn't know whether the government was going to be able to continue to pay its bills or wanted to. We have the resources to pay them, but we didn't have the political will to reach ahead of a deadline, an agreement on how to pay them. Finally, we got through that. As you talk, just kind of absorb all that I've talked about. Wow, what a year we just came out of. You would think that we probably would have seen a global stock market and economic shock from any two or three. But as we ended up the year, shown on the chart, the S&P 500 had a little dip in mid-year, but basically closed close to unchanged. It was a photo finish. It dropped 0.04 of 1 point at the end of the year. Ended up with about a 2.5% total return on the year. Not great, but boy, it could have been a whole lot worse. Looking ahead to 2012, give you the top line summary, our feeling is the economy, which moved ahead in spite of all the things that I just talked about, will continue to muddle ahead, probably going about 18 miles an hour in a 55 mile an hour speed zone, getting a little bit of forward momentum, and the financial markets will probably remain in tow. I got to just stop. I have to congratulate your town. I understand that you have what will be a huge yogurt processing plant coming in. Congratulations winning that contest at the municipal level. You ought to feel good about that. And that's one of the things that we see happening. Businesses are starting to expand around the country. Businesses are starting to commit capital because they can compete locally and regionally, and the businesses that have good business models are investing back in America, in their plants, in people, and I really applaud your city and civic leaders for making that happen. You also had the benefit of the resources. I understand you had plenty of cows that kind of facilitated that, but the bottom line is congratulations on that particular event. Oh, this is a chart you're not going to be able to read. All I want to do is say there are a lot of things going on at different points in time right now that have impact on our economy and our markets as we look out over long periods of time. I take a big smorgasbord as a market and investment strategist. My job is to try to make sense out of all these different things that are happening, and I start out by classifying different factors depending on when I think they will happen, what the probability of them happening, and what the impact are in the short, medium, and long term, and anywhere from very negative to very positive. Well, I want you to focus and not really concentrate or figure out what I've put on the board in terms of content, but just kind of look at it and think about the fact that there are a lot of things on the red side of the board, and those are potentially negative things. Yes, there are problems, and yes, we know about a lot of them, and we're going to have to deal with them. They're going to range from the possibility breakup of the European economic and political union base, maybe out 3, 4, 5 years, to growing tensions in the Middle East. It kind of bothers me to see Iran testing middle-range missiles and having nuclear capacity behind that. That kind of bothers me. If I were in Israel or Egypt or Saudi Arabia, that would really bother me. My guess is if they had a target in mind, it would probably be Kuwait and Saudi Arabia, not Israel. But it bothers me, and that's something that's on the red zone. We also are seeing economies dig out from the catastrophic weather damage. But the good news is, on the right side, where we see a lot of green, there are a lot of positives going as well. One, Japan recovery in terms of their economic base is a very big positive. Number two, consumers at this point have regained some degree of confidence, but it sure hasn't prevented them from spending. Congratulate yourselves. You continue to go to the malls at record numbers. Consumer spending is at an all-time high. Now, I will say, and Emmy could probably back this up because she has the numbers, that the consumer retail shopper was far more discriminating this year in terms of what they paid for the product that forced a very, very heavy promotional advertising and promotional pricing. So basically the proof is in the pudding. While the retail revenue numbers are up, and that's good for the economy, we'll see how much of it flowed to the profitability of stores like Nordstrom's, Target, Kohl's, JCPenney's, and others. Federal government, whether we like it or not, is contributing to economic growth by spending what I consider out of control astronomical amounts of money, but that does add to the economy, and that is, at least for economic short-term growth potential, a positive. That causes, though, longer-term problems because we have to finance it, and laws of economic physics say if you're going to go out and print a lot of money to make that happen, there's going to be inflation coming down the stream at some point in time. But I just say, we're a lot of factors out in the world. I'm going to shape that big list down into the 4 E's, the 4 factors that I think have the most impact or will have the most impact this year. They are Europe, the economy, employment, and the elections. And I'll give you some bullet points behind each of the 4 factors. Looking at Europe, we're going to continue to hear about the fact that the banks in Europe, which hold most of the troubled debt issued by countries like Portugal, Italy, Spain, Ireland, they hold that debt. The Europeans weren't quite as smart as what we were. When we raised the debt to fund the housing crisis back from 2003 to 2008, we shipped it out all over the world. Wall Street engineers packaged it into products that nobody understood, but it had a pseudo AAA rating. So what we found was that people around the world held the problem. The European governments, though, in issuing debt that they used to finance their welfare system because they didn't have the economic growth to pay cash for it, basically sold their debt to European banks. Those European banks right now are sitting on a lot of paper of questionable value. And the question is now, how do you refinance it? So that is a problem. We see Europe slowing down. It is most likely in a recession now. There are questions about whether the euro will remain the currency of a stable, politically strong currency in Europe, and there are ramifications here in the United States because we do a lot of business with European countries. A lot of American companies have full-scale businesses where we produce, manufacture, design, and sell in Europe. I get a lot of questions, and the question is, gee, if Europe has a major problem, isn't that going to take down the U.S. economy? That might be something you've heard or heard commentators ask. The reality is our level of business in Europe is about $150 billion a year. That's a big number. Yes, it's a big number, but it's a small number in relationship to the amount of goods and services that our economy totally produces, which is about $15.5 trillion. So it's a little over 1% impact on our economy, and if Europe drops 20% and that number shrinks from 150 billion, let's say, to 100 billion, it'll be rounding error in terms of our growth rate. Companies doing business in that part of the world will feel it. It's going to remain a wild card, but I don't think we're going to see a recession or a global shock coming out of Europe. It's going to present headline risk. Commentators are going to love to do it. You're going to get sick and tired about hearing it on the evening news, but it is there. Let's switch to the economy. We are in our 9th quarter of all-time record economic growth in the United States. When I came and visited you 18 months ago, that number was at about the 4th quarter of record growth. We've completed 8 quarters in a row of record all-time growth. Our country is producing more goods and services in all forms than we ever have at any time in our history. And you might look and wonder, how is that happening? We have 8.5% stated unemployment, and the reality is we probably have about 18% of our population, of our working people, either unemployed or marginally employed. It's happening because employers have been able to figure out how to run their businesses more productively. Think about those businesses that you may be involved running or seeing around you. You're incorporating technology. You've been able to outsource and to be able to bring in products from all over the world that have been globally made, but be able to be delivered to you as if they were produced in Pocatello. It's been amazing watching this. We see the interaction of the internet as the communication, the information linkage services that connect all this together. Good news, banks are lending. I came and talked to you 18 months ago and said the number one problem that I saw was restrictions placed by the regulators in terms of banks prohibiting and preventing bank lending on Main Street to other than the top 1% or 2% of their eligible clients, and those clients didn't need the cash to begin with. I remember walking out of here talking to a bank officer and saying, you're understating the problem. It's even worse than that. Well, we're starting to see that flow through, and the good news is we're starting to see businesses on Main Street that now have this unique experience happening. They're actually their doors are being knocked on by bank marketing representatives, looking to see if they might restore lines of credit or provide other banking services. Those people were invisible for 3 years. I'm not knocking the people that did banking services, but that was the environment. And that's helping us. That's helping the economy grow. It's growth at Main Street level. Small businesses that hire back 1 or 2 people, 2 or 3 people, or innovative entrepreneurial businesses that spring out of places like Silicon Valley or like your yogurt factory that are coming up that bring America back to life. That is happening. Not fast enough. We need a lot more help that way. The Federal Reserve, we have to watch what happens in Washington. The Federal Reserve makes that money possible. They are our friend. They're continuing to take it. I call it, they got that fire hose, that monetary pump fire hose going full blast. And it's still going full blast. Now, 4 years into a post-financial crisis, trying to stimulate flow as it goes through the economy. We have not seen the economy go through a Niagara Falls event when the Federal Reserve is pumping money at the rate that it's pumping today or keeping interest rates at ultra-low levels. There could always be a first time, but when we look back over 60 years, we've not seen the economy come to an abrupt halt when the Fed was making money as available as it is today. Housing remains a big problem. It's an overhang. It's an overhang on all of our minds. How could this economy be doing so well when one of the home pricing agencies, internet people like Zillow, tells us our house price is estimated to be 20 to 25% where it was 3 years ago. Well, the reality is we've had to adjust back to prices that we saw for homes in 2003 and 2004 before the housing bubble took place. We're starting to see stability there. That's a good sign. We're seeing stability, but off of a low base. The reality is we built lots and lots and lots of homes, and in some cases a lot more homes that were needed in markets like Phoenix and Reno, Southern California, Florida, and resort areas that are going to take a decade or two to finally fill. That's one reason housing activity is slow. But it's definitely picked up in Portland, where I live, in that the homes that are selling in the 200 to 400,000 range are back in terms of activity level to where we saw 3 and 4 years ago ahead of the big downturn. Regional economies are starting to improve. We see diversified bases throughout the Northwest being helped by improvement, order flow, and just really increased production and employment in the aerospace activities, heavy manufacturing related to trucking, heavy industrial parts that supply those industries, as well as some regional food and healthcare products and supplies. All that's good news. I talked about the consumers being at a record, auto sales up, investment spending up. Our bottom line is the economy grows at a little bit faster pace in 2012 than 2011, slowed down by Europe, slowed down again by some regulatory restraints put on businesses that are still concerned about healthcare costs, financial regulation, and a few other things. We keep a long list at D.A. Davidson. We look at about 30 to 40 factors each week. I grade them out. And on the right-hand side, again, a lot of names, a lot of numbers, or a lot of names, but it shows us a long list of factors that we follow and track that point to an economy with growth potential. Let me shift now to the employment situation. Number one news item, actually probably a little bit ahead of Europe in terms of ink and time on air. Unemployment about 8.6%. Slow employment growth ahead of us in 2012. What is interesting is I heard candidates coming out of Iowa talking about the fact we need to create jobs. Yes, we need to create jobs. A bigger need is to fill the jobs that are there and open and unfilled. 5 to 7 million. We got a potential hireable base of about 10 million people. And we got 5 to 7 million employers looking for people to fill jobs. Probably didn't know that. It's been an amazing statistic. What are some of the problems? Why aren't those open jobs being filled? That to me is the number one problem, and I'd love to hear our political leaders running for office talk about that. What are we doing to get those people into those jobs? The problems, the people that have jobs open, complain about the fact that candidates don't have the right education, they don't have the right skill level, they're locked in and can't move regionally between geographic areas due to housing, either availability of housing, but more important because they're locked into mortgages that they have to deal with. And a lot of cases, the mortgages that were written between 2005 and 2008 include covenants that said if you move from one area to another, let me restate that. If your mortgage depends on you being the primary resident full-time in the home where the mortgage is taken, you move out, the mortgage is immediately callable. If it's underwater, you got a big problem. Normal prior generations, we watched people move around the country to where the work is. I know where lots of jobs are. I mean, lots of jobs. Anybody willing to work that knows somebody who needs work? Well, go to western North Dakota or eastern Montana. The average wait time to get a job is about 6 hours, but you better be clean because a major problem preventing the unemployed or a portion of the unemployed from getting jobs are that they fail to pass drug tests, or those who come into jobs in random testing, which more employers now are requiring if they're in heavy skilled labor positions, are random drug tests, fail and are immediately fired. There's some disinterest because we have a very long unemployment window where we pay benefits, and frankly, business regulation in some areas has prevented hiring. So there's some big things, some big hurdles here, but we could create jobs. All we need to do is be more innovative, encourage innovation, and one of the things that I hope to hear is a lot of that in the next 9 months as presidential candidates vie with each other and tell the American public what they're going to do for America. Let's talk about that last area, the elections. I am not a good political forecaster, so I'm going to stay out of that one. But what I do know, we all know this, that there is a presidential election ahead of us. I also know, I was sure glad to get Iowa out of the map. I don't know about you, but a lot of news attention went into the Iowa election. It was really interesting last night that was a photo finish. 8 votes determined the, quote, caucus winner. I'm not sure. I think Iowa is a state that divides its electoral votes or its party votes in its conventions by the results of those caucuses, but we're going to hear a lot more about it. It's going to be very interesting. This year, we have 33 senators up for re-election, as we do every 2 years. 23 are Democrat incumbents and independents, and 10 are Republican incumbents. Just the flip-flop of what we saw back in 2008. So it'll be an interesting, or I guess really 2006, we had just the reverse. Where Republicans had 27 incumbents up for re-election and lost 19 of those seats. The Senate then turned over for the last 2 years of George Bush's administration. What, as a strategist, I do focus on and I want to hear about are how the candidates are approaching what I consider major policy issues that have economic implications. And these include tax reform, and we're going to hear a lot about that because we have the tax brackets that were set back in 2003 up for review, and there will have to be a decision made whether they will be kept in place, modified, or thrown out at the end of this year. Other things that we know about are corporate tax credits, personal tax credits. A lot of the things that were put in place that individual families have that have received credit benefit, they're scheduled to disappear at year end. So we're going to have a very, very big policy fight at the end of the year on that issue. We'll have one coming up in less than 2 months before the end of February on whether to extend even beyond the end of February the current holiday on the increase of the payroll taxes, particularly on Social Security. Healthcare regulation, protectionism. When I look at protectionism, we know a lot about labor job protectionism, but trade protectionism is a very, very big issue, particularly in a global economy. The reform of the healthcare reform also will be an issue that we'll be watching closely. It has big economic impact and could be benefits or could be a barrier. And finally, entitlement reform. We don't want to hear about that last one, but it is a very, very big issue on the plate. Kind of pulling things together, quick look at the markets, and I'll kind of finish at this point. This is not an archery bullseye that I have up on the board, but what I like to do is I like to look at the markets in terms of long-term cycles, typically 4 to 8 year cycles, and what we find are there common factors that we see appear at different points in that background. And at this point in time, our feeling is the U.S. stock market, if we look at that picture, the circles, 530 is at the bottom of the cycle, high news at 12 o'clock. We're probably at about 10:45 on the cycle. For stocks, we're close to high noon. For bonds with interest rates at very, very low levels. Gold, we think, has gone past the top, and real estate finally coming out of the bottom. I get a lot of questions. Okay, we're at 10:45. Tell us when are we going to get to 12 noon? Let's say to 11:15 so we can act to do something ahead of the next big downturn in the market. What are you looking for? And I'll just share a couple things that we are looking for. These are the indicators that tell us that we're close to a top on a market basis. Number one, at each market top, we normally see long-term interest rates at multi-year highs. They're right now at a multi-year low. They're at a 15-year low. We're very close to that. We see the valuation for the stock market also at a cyclical high. Well, it is well below its 10-year average and also near a multi-year low. We see probably the big one is the Federal Reserve shifting course and telling the world it's going to rapidly increase interest rates, or it has already begun to do so. We haven't seen any signs of that. We will look at global emerging economies that have been growing fast, and we'll look to see if they slow down. Yeah, we're starting to see some of that. So that's one item on the checklist that says, okay, we're maybe getting closer to noon. Inflation pressure should be growing. We don't see that. The money that's flowing into the economy from the Fed, growing very, very rapidly. And a couple other things that we look at, we'd be looking at for the appearance of what I call stock market bubbles. Items where investors just go off the charts on the top end in terms of looking ahead. So we don't see many items in that area. We do see corporate profit margins starting to shrink, but out of 12 items that we look at, 10 of them are still very, very much in go mode. And our conclusion is we're looking at a stock market for the next year that probably should end somewhere around 13,000 on the Dow, 1325 on the S&P, mid-single digit price returns, a little better performance than this year, but we're going to have a lot of bumps along the way. I thank you for having me here. I hope this overview was helpful, and I hope that you take the time to sit back, think about the blessings that we have that were so beautifully presented in the invocation today. We do live in a blessed land. We have a lot of talent. We have a lot of skills. We have problems to overcome, but we are an innovative nation, and I think that we someday ought to wake up, pat ourselves on the back, and realize that we can do a whole lot more, and we are doing a lot better than what we hear about on the 6 o'clock news. Thank you very much. I'll give you your mic back. Here we go.